Welcome back to Investing with Confidence. I am your host, Joshua David, having a great time on this beautiful day with my handsome friend, Mr. Al Connickson. Also, don't forget to subscribe to the podcast wherever you listen to podcasts, but also check it out on YouTube. Al, as we get in this next topic of the smart money, we talk about this every single week. We talk about the smart money and how they are creating income utilizing the financial markets. And it's not just the stock market, right? They're using stocks, they're using options, they're also using futures and Forex, which are different types of asset classes. Unfortunately, the public only knows the stock market. That's all they talk about on TV. There's stuff all over that you see about the stock market. Well, there are a lot of, limitations with the stock market. People are missing out on some of these opportunities with these other assets, not because you can't do them. It's just because they just don't know what they are. So let's talk about some of those techniques that the institutions, the smart money, what they're doing for income. But these strategies are also available to the public.
Yeah, well, I think it starts out with probably the biggest challenge that people have if they're going to try to trade or invest, and that's that they think, act, and execute like retail traders, like amateurs, and they don't even know they're doing that. It's because they've been conditioned to do it. And just think about this for a minute. Anytime that there is a trade or an investment or transaction, there's two parties to that transaction. And one party is probably going to benefit to the detriment of the other party. Do you think that party is going to help the other party if they're on opposite sides of that transaction? No. So the pros know. And by the way, they control probably 80 to 90% of all the trades. So there's a good chance as a retail trader, you could be on the opposite side of a pro, of the smart money, the big institutions. And that's one of the things that our students understand. Actually, I think really what happens is that when somebody becomes a student at the Online Trading Academy, they've accepted the fact that they might have to and probably will have to unlearn almost everything that they've been taught about investing to make room for what really matters and for how to take advantage of what really matters. And if you're being taught by the party that's on the opposite side of a trade from you, you have to assume that maybe they don't have your best interest in mind. And we do. You should have your best interest in mind. To be able to do that, why not trade like the people that have consistently shown the ability to be profitable? And that doesn't mean that everyone on every trade is going to be profitable, successful. Even the pros, the big money aren't, but they understand, number one, how to protect what they have. So you will very seldom, if ever, find a pro that has a big loss. They're always taking small losses, which can never become a big loss. So risk management, learning how to become a manager of risk is the number one thing that you should learn. That's the primary goal that we have for all of our students.
Yeah, and really the financial markets, it's actually pretty simple how it actually works. It's a transfer of assets, right? From the people that don't know what they're doing to the people that do.
Correct.
Right?
Mm-hmm.
So you have to have a strategy to trade like a pro and not like an amateur. I mean, a lot of people think that you have to be a pro to trade and invest. Well, you don't have to be one. You have to trade like one. You got to have those techniques and those different tools available to you.
Right. You don't have to be real smart to do this. You just have to be smart enough to follow the people that are really smart. And those are the people that work for these big firms. And they make a lot of money because they're smart, because they have the experience and the knowledge. Well, we don't have to do that. We don't have to do all the work. They really are doing that work for us.
It sounds like you got to be a smart fellow.
I know where you're going with that, and I'm not going to fall into it.
Or is it smart feller?
It's a smart fellow.
Okay.
Yeah, some of you might have heard that, the smart fellow thing, but I'm not going to do it. I will not do it on air. But you just have to be smart enough to follow the people that are smart, that know what they're doing. And that's really where it gets down to thinking, acting, and executing like the pros. How can you do that when they have these special things that they're using that we don't have access to? Well, the truth is that we do have access to the same things that they're using, but why don't they tell you to invest in those things? Why do they put you in something different than they are in for probably the primary part of their activities? And it's because it's too much work for one thing, and the money isn't there for them. They would rather put a client into something that requires little work on their part, but has a good payout, a nice consistent payout. For some of the assets that we're talking about that they use for short-term income trading, short-term cash trading, like the futures market, the foreign exchange market, and the options market, the cost to the client just isn't there to be beneficial enough for some of these big firms. And it's too much work because those are typically shorter term trading vehicles. Futures, for example, oftentimes you're in and out of a trade in a day or just a couple of days. Well, if you have 200 or 300 or 400 clients, it's pretty hard to stay active, to really put enough time into managing those accounts where you have that kind of turnover. You just can't do it. Easier to put you into something that you hold on to for decades where there's very little management on their part, but there's that consistent flow of fees in costs to have those assets.
Yeah, and just to give you another example of how the institutions, how they're doing things versus the public. I mean, Al, you were talking about the institutions put people in different techniques and strategies that really don't really benefit them. It benefits Wall Street, right?
Correct.
Now, think of it this way. If you are a pitcher in baseball, do you think you're going to go into that windup and say, here comes a fastball and here comes a curveball?
Oh, telegraph that to the batter.
Yeah, they're not going to tell them what they're going to do, but they
definitely are.
But they're probably going to have a fastball ready with a curveball. Actually, is what they're actually throwing. They're going to say, "Oh, here comes a fastball," but it's actually a curveball. That's kind of what's happening with people that have managed money. Is they're being put in something different than they're actually doing. So it's kind of a sneaky little thing that they do. But I get why they do that. It's the business model. It's a great model. But that's why we have a retirement crisis. That's why the public isn't doing as well in their accounts that they have managed. Continuing this discussion about the smart money, Al, and these other assets, right? You mentioned the futures and the Forex market. They utilize those for income. That's why there's reasons why they use them. Let's start with the Forex market. We both know I think that's the best market for people to start out in the financial markets with, because there's some different requirements that are not needed like you need with the stock market. So talk about some of those different perks that it has.
Yeah, when we're talking about leveraged assets, the Forex market, the foreign exchange market, is where you're looking at the difference in exchange rates between two different currencies. Gives you the opportunity to participate on a global scale. That market, the Forex market, trades 24 hours a day. It is the largest market in the world. Trades over $5 trillion a day, more than all the stock markets combined, which gives you a lot of liquidity, meaning you always can get into and out of a position very quickly, which can be very important. Again, the 24-hour trading gives you the opportunity to choose when you want to do this. And you had mentioned, Josh, that you think the Forex market is one of the best markets. The interesting thing is there are some people that believe that the futures market is the best market for them. Forex is great for you. Some people, I trade options, so I happen to like the options market. But I think the important thing is that for our students, they don't have to, come to one place to learn how to trade the foreign exchange market. Find another source to learn the futures market, another source for the options market.
I'm glad you brought that up because each individual person has a different objective.
Correct.
So that's why you need a strategy and an asset that aligns with your objective.
Yeah, and the problem with what Wall Street puts most people into, that typical buy and hold strategy, which is usually made up of either mutual funds or stocks, that doesn't take individuals into consideration. They will tell you, yeah, we're going to do that. We're going to be putting together something that is specific to you, but it really isn't. They're putting you into something maybe with thousands of other people. Your path, the path that you take to approach the financial markets, should be different than your next door neighbor, for example. And people have different objectives, as you mentioned. People have different risk tolerances, different personalities, and there may be one asset that fits better with you specifically than someone else. So the bottom line there is that you have access to education on all of them through the Online Trading Academy.
I'll talk a little bit more about this 24-hour market. You mentioned people have the opportunity to trade any time of day, right?
Correct.
So elaborate a little bit more on that. What does that really mean? Do you have to go to London to trade in the evening, or do you have to go to Asia to trade in the early evening?
That would make the cost of trading very, very expensive.
You're right.
Maybe if you like to travel, that might sound like a good deal to you, but you don't have to. You don't have to get out of bed to do these things. With the internet now, the high-speed internet, the sophistication of the trading platforms, You can do this anywhere. You do not have to go to a particular country to be able to trade their currency, for example. The way things have progressed compared to maybe 20 years ago, it really has been in the direction of the individual trader, the retail trader. The benefits really are now in our favor as opposed to having been, having grown in the favor of the pros out there. So we have access to the same assets. We have access to high-speed internet. I mean, years ago, if you wanted to do a trade, you'd call a broker who would write out the order on a ticket, piece of paper, rip the ticket off, run up to the front of the office to the cage. The people in the cage would call a trader on the East Coast. The order was placed, and they charge you $300-400. Now it's a matter of taking a finger, pushing a button on a keyboard or a mouse, and you're in or out of a trade.
Yeah. Explain real quick. I know we're getting close to the end of the segment, but we talked a little about the Forex market. That's currencies.
Right.
What's the futures market? What is that?
The futures market is comprised of a number of things. It's probably the best diversified family of assets. You can trade, if you want to trade in the stock market, if that's your kind of go-to, you can trade the major stock markets almost 24 hours a day. You can trade commodities, corn, sugar, soybeans, and I think you know where we're going with the next one.
We've been getting a lot of comments about the lean hogs.
We really have. I at some point in time, I promise you folks, I will find out why Josh has such a liking to lean hogs, but not today. But you can trade the various commodities. You can trade precious metals, gold, silver. What about oil? You can trade oil, currencies, interest rates. You can trade kind of the currencies like you would in Forex with the futures market. It's open almost 24 hours a day, but both futures and Forex have very good leverage. And that's really the advantage with these assets is that it takes whatever money you have in an account and it maximizes the power of that dollar. Each dollar is multiplied by maybe 20 to 1 or 50 to 1 or 100 to 1.
Well, that's the key too. I mean, everybody maximizes their capital in their everyday life. People have credit cards. People have mortgages on their home. They're maximizing their capital. That's the same thing in the financial markets, and the institutions are doing it. They're telling people to go in stock, which does not give you that opportunity to maximize your capital because you need that physical dollar to purchase an actual stock. And you mentioned something pretty interesting earlier about that path. Everybody's path is a little bit different. Stock might be the right thing for you. Futures could be the right thing for you. Forex might be the right thing for you. It doesn't matter which one it is. You just want to make sure it's for that path so you can get to that destination, whatever that destination is. To find out what that path is, you have to learn about it. You have to learn what it is and why you would utilize it. Al, coming up next, I want to talk about retirement techniques and strategies that we can use just like the institutions.
Sure.
We'll be right back.